This is an interesting one. Byron Bay. It would almost become a bit of a comedy, didn't it, over the summer? Everyone posting photos from Byron Bay because no one could get anywhere else from New South Wales.
Yeah, look, it's certainly expensive. I mean, it is getting more expensive than many premium suburbs of Melbourne, Albert Park, Balwyn North. You know, it's really getting up there, getting close to $2 million.
Yeah, it's extraordinary to watch. And what about the big announcement this week with the unemployment rates announced? And there was a decline it continues to fall to 6.4%.
Yeah, look, it's certainly coming down. What we're finding with the unemployment rate is that it is still higher than January last year, but it is starting to decline across Australia. Retail trade also came out, and that showed some incredible strength. It was up over 10% from January last year, and really driven by people returning to the shops, but also comparing to January last year when we had those really terrible conditions as a result of the bushfires. So, you know, I think there's, some very positive news coming through. We are looking at a very strong 2021 in terms of economic growth, and obviously that flows through to property as well.
Absolutely. So, look, there's this feverish chat, oh, sell your property, get rid of it now. But the bottom line is in some of the bigger places, or, you know, even smaller places, you mentioned Byron Bay, they're expecting 12 to 15% growth again in 2021.
Yeah, I mean, look, it's quite incredible. I mean, when we have a look at some of the locations seeing these really, really strong price growth conditions, they are a little bit more unusual. I mean, we typically see premium suburbs pick up in a recovery. We're definitely seeing that, but a lot of regional areas doing really well. So some examples, somewhere like Yama to the south of Sydney, starting to see some very, very strong conditions. Smaller cities, you know, Hobart is now getting to a level where the median price is almost at Brisbane's level. So, you know, there's this surge in pricing that we're seeing, not just in capital cities, but also across regional Australia as well.
And you spoke last week about the snap lockdown in Victoria and the lack of auctions. What effect has that had on that state?
Yeah, look, I mean, it was a short lockdown. It was only 5 days. And, you know, we know Melburnians love to get back to business. I think one of the long-lasting effects for that city will definitely be the Melbourne CBD. And, I think on one hand, it is, you know, we can certainly see sales activity coming back. We've got very strong bar activity. If you go somewhere like Mornington Peninsula at the moment, we've got very, very strong levels of activity across that area. But the Melbourne CBD, it does continue to dominate in terms of very high levels of vacant apartments. We've got problems in the office sector. People aren't returning to the CBD to the same level that they did prior to the pandemic. So definitely recovering, but a little bit slow. I mean, compared to Sydney's market, for example, which, you know, he had a bit of a head start given that it wasn't locked down for such a prolonged period. A lot of the things that we're seeing in Sydney at the moment, such as really surging prices in prestige property, hasn't yet translated to Melbourne, but we do expect that to happen over coming months.
Oh, yeah, but they do move quick in Melbourne, of course. There's over 800 auctions today. It's almost like, OK, let's take a deep breath and then boom, it's a huge day again today.
Yeah, it's certainly true. I mean, you know, I think what's happened in Melbourne, I mean, we saw it in the retail trade figures and even the unemployment rate that came down quite a bit, that, you know, Melburnians are really keen to get back to business. You know, we have seen high levels of confidence as well, which, you know, is really helping that city. So, you know, as long as that can be maintained, which, you know, ideally we don't see any more of these snap lockdowns, you know, borders remain open. And I think that's really critical across Australia that, you know, on one hand, we can't open international borders if that's obviously problematic, but the more we can keep state borders open, the better for economies across Australia and certainly for Melbourne and Victoria, that, you know, as long as it can keep out of these snap lockdowns, it is really full steam ahead.
And what about the rental markets? How is that all going?
Yeah, the rental market is recovering. I mean, we can certainly see that if you're looking for a house in a nice suburb across Australia, it is getting very, very difficult. We're starting to get affordability issues arising in many regional areas at the moment. So I think what's happening in those areas is that people have looked at a move, and, you know, usually when you move to an area, you tend to rent first before you buy. So on one hand, we are seeing prices surging, but also rental levels surging as well. So A few problems there with affordability in some of the smaller regional areas. Obviously, people who aren't on capital city incomes do see things quite differently when this price growth occurs. At the moment, just coming back to the unit market, that it is very Melbourne focused at the moment. They're the areas that are seeing pretty high vacancy rates. But over, once borders open, particularly once foreign students return, it will look very, very different for those markets as people return to those apartment buildings.
And finally, and just very quickly, there's nothing quite like confidence, is there, in the world that you work in? And with vaccinations starting to be rolled out this week, it really does put a spring in the step.
Yeah, absolutely. I mean, you only have to look back to last year and what we saw in November once that announcement was made with regards to vaccination. And once we saw that Australia was officially out of recession, we did start to see confidence surge, not just for consumers, but also for businesses as well. And this is the thing that's so critical. I mean, obviously for property, confident people are more likely to buy property and more likely to sell. So, we do see increased levels of transactions, but confident people spend more, they go out more, they plan holidays. And similarly, businesses now are also, we talk a lot about people being turbocharged to buy housing at the moment, but businesses are also turbocharged with very low interest rates and really able to invest in their businesses because the economy is returning and also because the ability to get such cheap finance is really apparent across all types of businesses.
Yeah, and it does look like the interest rates are going to stay low for quite some time. Thank you very much, Nerida. We'll see you again next week.
See you then.
Yeah, at least 3 years.